Hello and welcome. You're watching Your Trades with me, Snehisha, and with me is Priyanka Uppal, and you're watching ET. Now let's make sense of the moves on the market today. What a volatile day of trade, Priyanka. At some point, I was really happy that the markets were doing pretty well for themselves. Nifty up 0.8%, logging in some good gains, and then suddenly in the middle of the day, we did see a very sharp spike down coming in on the Nifty. Nifty managed to close the day with a down of 0.7%, a very big fall coming in, because at one point in the day the Nifty reached a high of 22,326, and now we've managed to close just shy of the 22,000 mark at 21,995. Very steep fall coming in on the Nifty. That can also be attributed to a lot of things. We've seen some massive FII selling happening. Today is also the expiry, and today is the last expiry before we head to polls tomorrow. Phase 1 of the election will start tomorrow as well. Lots of selling pressure also seen in the market today, but that's Nifty. Then moving on, even the broader markets, they've managed to end the day in the 0.5% downtick coming in for Nifty mid-cap. Nifty small-cap, which was performing all the other indices, has also ended with a slight negative buy. But nonetheless, the small-cap names have done pretty well in today's trading session. But take a look at the Nifty gainers. You had Bharti Airtel, Power Grid, Bajaj Auto, LTI, Mindtree, Hindalco. These stocks did pretty well amid a tempered market. On the other side, big Nifty losers, 4% cut coming in for Apollo Hospitals, downtick for Titan, Nestle, Coal India, ONGC as well. So these are all big losers when it comes to the Nifty 50 pack. Even among the broader markets, Just Al, that did pretty well on the back of its numbers as well. Solar Active was up 12%, 361. VAM, Timken India, Alok Industries, all of these stocks have done pretty well. On the flip side, then you had Sterlite Tech down almost 8.5%. Spark continues to be in lower circuit for God knows how many days now. A series of lower circuits coming in for Spark as well. Max Healthcare, IGL, Mahanagar Gas, Oberoi Realty, Aegis Logistics, all of them with sharp cuts in the red. But other than all of these stocks as well, we had one stock in particular that did pretty well for itself, and that was Mastek India. Among small cap names, then Mastek India did pretty well for itself on the back of this order win, this 1.2 billion euro order win that they have got from the Defence Ministry of the United Kingdom. So that stock also did pretty well in today's trading session, up as much as 17%. At one point, tempered down to 11% gains at one point of the day. But well, yes, that stock did pretty well. But other than this, Priyanka, lots of newsmakers and buzzers. So take us through that as well.
Absolutely. In fact, you started on a very good note that you were very happy. In fact, market also rebounded after 2 days of losses. But then the kind of volatility bowed around about 1 p.m. Then, of course, the macro factors. And let's not forget that FIs are still very cautious on the F&O stocks, indices, and there was no direction for Bank Nifty. Last week we saw Bank Nifty rising. This week banks have been baggers. So there was no clear trend on Bank Nifty also. In fact, they've been dragging. Of course, VIX added. A lot of the reasons we go into first phase of poll. All these factored weekly expiry. But then stocks, clearly the space which did well was Telecom space. You talk about Bharti Airtel, Vodafone on FP also, and the brokerage upgrade also. Indus Tower on a couple of brokerage notes ever since it's been coming. So all these has made Telecom space, at least they hold it on to the ground. In fact, small cap also did not do that bad on the consecutive for the second day. And then, of course, on the account of Mastek and stocks like Just Dial. Then a couple of names like Nestle, which happens to be the top loser if you talk about Nifty stocks. Of course, it registered its biggest single session decline in 3 years. Reports claiming that Nestle adds sugar to the baby food. That's one area. But then, if you remember, Snehi, clearly ever since Nestle India parent they hiked the royalty fees. Since then, there has been hammering on Nestle. Last week, it did recover, but then again, there's a negative news. So these news, which a couple of reasons which added to Nestle. These two reasons were the main which added to the Nestle's down move. But then, what lies ahead? 22,000. Clearly, we slipped in and closed below it. What do this means for market? Where is the immediate support lies now? Kunal joins in for all the technical check. Kunal, welcome. What do you make of the markets? Because the sudden fall which came around 1 p.m. and ever since, earlier there were talks about maybe it's an algo glitch or maybe some geopolitical comments which came in. What exactly could be the reason? Where did you see the most of the F&O action, and now what lies ahead now?
So good afternoon. I think a lot of reasons why the markets, I would believe, could have gone to a corrective mode. One of them, and I'll stick to the market internal specifically. One of them was the sharp rise which we'd seen on the index, where at one point we were just threatening to go above the 13.5, 13.4 mark for the India VIX. So I think that's one very critical aspect, because when the markets adjust with a higher volatility or higher levels on the India VIX, they tend to adjust on a much more sharper side. So the faster the adjustment, steeper is the slide for the lesson. I think that's what we saw today. The other reason what I would probably also add would be into the Nifty expiry, the weekly expiry. I think that's also another critical factor, because generally what happens is, typically on an expiry week or an expiry day, we tend to see a lot of option writing at strong psychological marks, like for example 47,000, 22,000. These are strong round numbers for the indices, and generally we expect that in such round of sharp volatility, the markets come back and retest these strong psychological levels just to try and unnerve option traders, especially on the short side. So I think I would probably put this towards more on the technical factors rather than more on the geopolitical factors as such.
Well, absolutely, and that makes a lot of sense. We have been seeing some FII selling pressure also coming in over the last couple of trading sessions, Kunal. But help us understand that amid a market like this, where on one side we're starting the day on a very strong foothold, but on the other side we're slowing down also. Where are you seeking comfort when it comes to specific stocks, and where do you see sort of a safety net amid a market like this?
Absolutely, yes. So I think bottom formations are very difficult and critical processes. They are not easy to try and figure out. But then I would probably play in terms of few specific charts which are still showing signs of strength, recovery is heading towards breakout. The first one is about PVR Inox. That's a chart which is looking really attractive. The stock today has been a lot more resilient. It went to a very mild intraday correction, recovered quite well to close at the high point of the day. So a buy with a target of 1470, 1480. Stop loss to be kept at 1400 mark. And the second would be about MCX. This stock is also very attractive kind of a chart. Now trading just around the 3,900 levels for MCX. I would suggest a buy with an expected targets about 4,000 levels, so 4,100 as a target, and stop loss could be kept at 3,800.
All right, record volumes on MCX already happening, and that's what it's taking the stocks to new levels. Thanks very much, Kunal, for recommending these stocks and sharing the logic and rationale behind it. But then, what has Srishti spotted on charts? Where do she see breakouts and breakdown? Srishti joins. Srishti, over to you.
Well, two counters that we wish to highlight today, and both the counters from the large cap space, and both of them have shown breakdowns on the technical front. First of all is Tata Motors, because this particular counter was seen to be down about 2% in trade today. But what was interesting to see that the stock actually managed to face a rejection exactly from its 20-day moving average, breaking the lows of the previous 2 days as well. And today's move was also supported by a short build-up on the derivative side. And just to add a fundamental news to it, maybe the Tesla's entry could be giving some nervousness to all these investors, but that's another story. We will talk about that in times ahead. But purely on the technical front, this is where we spotted a breakdown. So Tata Motors is the first counter. Moving on to the next counter then, and on the charts you will see Dr. Reddy's Lab. You will remember that just last week we have spotted Cipla on the weak side. That was a breakdown, and that managed to give a 5 to 10% move on the downside, and similar kind of a pattern is what we are spotting on Dr. Reddy's, because you will see that the stock was down about 2% in trade today, and it managed to make a bearish engulfing pattern on the technical front, a rejection exactly from its 20-day moving average, and now moving below, having short build-ups in the system. So these are the two stocks that we wish to highlight on the breakdown side. Back to you.
All right, Well, thanks so much for taking us through both of those breakdown names today. Not a surprise given how the market has moved today. But with that, let's get a move on. Let's get some opinions in. And time now for some interesting opinions coming in from the big market voice, Amir Arora. He's sounding optimistic on the entire financial sector, and he explains the rationale behind his bullish stance on this place. So let's hear him out, and let's understand what he's liking so much about the financial space.
The next mutual fund that is being considered in India that we might do will actually be related to financial sector. We think that this sector has, in a big picture sense, done very well all our life, which means more or less all the life markets in the 90s. And it has not done well, at least in aggregate, for the last 2-3 years, while the numbers have been good. And it is where there is a lot of breadth of choices, from mutual funds to brokerage to wealth management companies to banks to private banks to state-owned banks to credit card companies. It covers a large part of the market, and it has somewhat, not a lot, but somewhat out of favor. And so we think that is worthy thing to do as a fund. So that means we are very bullish on it as a complete theme.
All right, that's a take coming in from Sameer Arora. But a quick programming note for all our viewers. ET Now and India's oldest stock exchange, BSE, is celebrating BSE Day on 9th April, which is an extraordinary event, and that showcases the legacy and the future of the Bombay Stock Exchange. A remarkable day.
Absolutely, very interesting day, very exciting day lined up for the markets tomorrow, and the day will commence with a ceremonial market opening with Nikunj Dalmia. I will have the honor of ringing the opening bell from the floors of BSE with esteemed guests. Our keynote guests include KK Sri and Hemendra Kothari, alongside BSE's MD and CEO Raman Ramamurthy. Stay tuned for our exclusive special coverage on BSE Day tomorrow.
Welcome back. You're watching Your Trade. So, in technical terms, the already sold zone market further falls, takes it below 22,000 levels. What actually happened in derivative trades also? Let's understand. First, the trend on the Nifty and the short Nifty and the bank Nifty, both the trend looks like a short built up only. VIX spiked up today with the active calls where the maximum of the call writing happened was at 22,100 strike, 22,200 strike, and of course we closed below 2,000 also. Now these two strikes happens to be the immediate resistance, and where was the active put covering seen? Put covering was seen at 22,000 level, and a mild put buying was seen at 21,900. The immediate support, which looks like at a 100 DMA, close to 20,800 seems to be the immediate close support level.
Well, absolutely. So we'll take a look at how the market pans out tomorrow, especially because today was an expiry and we head into polls tomorrow. So we'll see what happens on that front as well. But let's kind of move on then, and let's talk about the story of the day. And well, it can't be one stock because we had a lot of market buzzers. All of stocks that were buzzing in today's market session as well. And as the earnings season is on, Just Dial has shown strong Q4, and Brigade Enterprises witnessed its highest ever pre-sales numbers as well in Q4, while Auto secures a substantial order from a leading European OEM. Listen to what the management had to say about the growth in FY25. We managed to interact with all three of these managements today, and we bring you all of those voices. Listen in.
So this year, as a business, we focused on getting our growth at minimal cost. Top line grew about 23% for full year and 60% plus for fourth quarter, and costs have been very well controlled. So this is what has overall led to margin expansion. And for next full year, while we don't issue any formal guidance, we think we should be above 25% plus margin. So despite whatever is the health of SMEs in the ecosystem, we are targeting that for next full year, we should be going at 15% plus for top line.
Coming year, we have said we are at least looking to launch another healthy pipeline of 10 to 12 million square feet. We expect all the segments to grow in parallel to each other, and we believe that this trend will continue. So we'll continue to build more office tech parks. I think we said we will look to launch at least 6 million square feet of office. We also mentioned earlier that we will be launching 5 hotels sometime this year.
We are expecting a growth of 18-20% in businesses altogether, and some businesses will be more than 20%. Some will be 18%, some will be 15%. So average 18-20% we are looking at the business. Of course, the more orders from the European countries we are getting in EV because they are planning to launch the vehicles in F25 and 26. And from domestic front also we are getting not big orders but small order for EV. Target is our total top line of 2,000. 12% will be EV business. More than 12% will be EV business. Target by 21 FI.
All right. So these were a couple of stocks which actually helped small cap index also hold down to green. But one pack which was clearly, in fact, one big conglomerate, but then we talk about in specific about Jio Platforms, because Reliance, the heavyweight, which was Reliance as a results early next week, Jio Financial recent maybe, but then we will talk about Jio Platforms, which Mulls listing. And in fact, Somni has very interestingly come up with some research on the Jio Platforms, and IFL Security also suggests that Jio Platforms could be listed very soon. Let's listen to what Sumit has to tell us on this.
Well, Reliance Industries remains in focus because the single biggest trigger, that is the demerger and listing of its telecom arm Jio Platform, is expected soon as per IFL. Now, why IFL is expecting this is because they are also saying that there could be a couple of tariff hikes in the next three calendar years in the telecom sector, as against two that we've seen in the last 4 years. This definitely shows that the pace of tariff hikes are expected to increase, and this will happen as and when Reliance Industries goes ahead or plans with an IPO for its telecom arm Jio Platform. Owing to these tariff hike factors, IFL has also increased the enterprise value of Jio Platforms. Now, this is the enterprise value of Reliance Industries' stake in Jio Platform. Now, Reliance Industries owns around 66% stake in Jio Platform, while the remaining 33.7 odd percent is owned by investors. So, the enterprise value of its stake has now increased to $0.9 billion as against $63 billion. However, if you see how the street is valuing Jio Platforms, the enterprise value is actually much more than what the street has been valuing. The average of 6 analysts that we saw are valuing Jio Platforms at close to $80 billion, while Reliance Industries enterprise value stands at close to $287 billion, which is near, which means Jio Platform forms nearly 29% of Reliance Industries currently. So, what could be the potential market capitalization of Jio Platforms on list? Well, it could be anywhere between 5.5 to 5.6 lakh crore rupees, and which is nearly 29 or 30%, and this could be the single big figure coming in for Reliance Industries going forward. So, what is Jio Platform currently? Jio Platform owns the telecom arm of Reliance Industries, that is Reliance Jio. It also has the enterprise business and the broadband business. Other than that, it has invested in host of startups like EasyGov, Redis, Care Expert, JioSawa, Netrada. All these companies are currently in growth phase, so analysts are not assigning much value to these companies, but these companies as well could have the potential at least to be big companies going forward, and hence Reliance Jio or Jio Platform has invested in these companies. Apart from that, it also has host of apps like My Jio, Jio TV, Jio News, Jio Cloud, Jio Call. So the upside potential when it comes to Jio Platform is much higher, but at this moment analysts are valuing Jio Platforms at 29% of Reliance value. The enterprise value stands at close to $80 billion.
All right, Tommy, thanks so much for that detailed coverage on Jio Platforms. We're going to move on then and talk about Vodafone Idea. That stock was another buzzmaker for today's trading session. They've already raised 5,400 crores from anchor investors, and their 18,000 crore rupee FP was also open today. And in this regard, my colleague Ajay Sharma caught up with Vodafone CEO Akshay Mundra. Let's listen to his views and opinions on tariff hikes in the Indian telecom space.
India today has the lowest ARPU amongst major economies in the world. Today, India has about $2.1 of ARPU, whereas China, comparable size of population and economy, of course, economy is large, is over $6.5. So we are less than 1/3 of China's ARPU. So by that benchmark, there is a lot of room for ARPU to go up. The second is that today, none of the players in the industry are returning their cost of capital. This can be a situation, and this has not been just 1 or 2 years, it has been 6 or 7 years. And the situation has got more accentuated with the 5G investments getting added onto the already large 4G investments. So it is imperative that for the industry to be healthy, tariff correction is required. It is, I would say, almost inevitable. And I would expect it to happen sooner than later. There have been tariff increases twice in the last 4-5 years. I believe that the rate of tariff increase, the speed of tariff increase needs to be better in going forward, because large investments have been made in 5G and people need to get a return on their investment.
All right, that was on Vodafone Idea, but then let's go ahead and talk about the stock which was one of the top losers of the day. We're talking about Nestle, and learning from sources that food regulator FSSAI has taken cognizance of the Nestle case. Sameer Dikshit is here with more details on it. Over to you.
The serious allegation that the baby food item of Nestle, which is marketed in Asia, Africa or Latin American countries, they contain added sugar. For example, Cerelac, if it is marketed in India, it contains added sugar of 3 grams per scoop. Now Nestle India has come up with a statement. They have issued a clarification. They mentioned that follow all the local regulations. They also follow the Codex Standard Commission established by WHO and FAO. In addition to this, they also mentioned that they fully comply with the regulatory norms. They follow all the nutrients value, and that is also mentioned in the packed food item as well. In addition to this, Nestle India also mentioned they are fully focused on decreasing the added sugar content, and in the past 5 years they have reduced around 30% of added sugar depending on the variant of the baby food item. But now the larger picture is that the Indian government has also stepped in and they have taken the case. So sources have informed that the food regulator FSSAI, the scientific committee, has taken up this case. They have taken the cognizance, and now they are taking up the Nestle case, and they will see into that what sort of allegations have been raised and how far the allegations are true or not. And if the allegations are found true, it is very likely that some major action might be taken by the food regulator. In addition to this, the health ministry has also taken up the case, and they are also going into the details of the entire case where these sort of serious allegations have been raised in. But if you see the larger picture, it clearly shows that the big FMCG company Nestle, they have got very strong hold in India. Reports suggest that alone in year 2022, they have a sales of more than $250 million in India. So it clearly shows that they have got a lot of questions to be answered.
Well, all right. Thanks for that, Sameer. But let's get a move on then. Nestle and all the stocks that we've already spoken about, there were a whole host of stocks that were quite the buzzers in today's trading session. So my colleague Gaurav is joining us with a quick roundup of all of those stocks. Gaurav, hi, over to you.
Right. Mastech was one company focused today because company was named as a supplier on the UK's Ministry of Defence £1.2 billion order for digital and IT professional services. And on the back of this news, we saw the stock also reacted positively. The second we have is Sterling, because company signed an MOU with South Korea's Yongjin for EV component facility, and they are eyeing for a revenue of 250 crore rupees by FY30. And on the back of this news, we saw a positive trend coming hit the stock price as well. Next, let's talk about ICICI Lombard, because company came up with strong Q4 updates. The GDPI was up 22% on a YOY basis, PAT was up 18.9%, and lastly, if you look at combined ratio, it stood at 3.3%, while the company guided that this ratio can go to 101.5% by the end of FY25. And on the back of this, we saw the stock was up almost 3%. Next, let's talk about TARG, because company achieved its highest ever pre-sales value of 1612 crore rupees, which was up almost by 200% on a YOY basis in FY24. And look at the stock performance also, it was up 5% and hit the upper circuit in today's trade. And lastly, let's talk about Dronacharya Aerial, because company signed an agreement with CBI Technologies for procurement of 200 type certified training drones, and this order is going to be for 3 years. And on the back of this news, we saw the stock was up almost more than 5% in today's trade. All in all, on the back of these news, we will definitely keep an eye on these stocks and see how they perform in the days coming ahead as well.
Thanks very much, Gaurav, for all the stock. That's all in this edition of Your Trades. Thanks so much for watching. Tomorrow when we return, of course, the phase 1 of Lok Sabha kicks in. Thanks very much.
If you like this video, then like, share and subscribe to ET Now.